Hello traders, good evening. Once again I come to you with another video of trading digests where we look into the week ahead with some potential setups. So we're going to be analyzing different pairs. So if you are here, you can also put in your pair that you want me to have a look at it. Just feel free. And then let me have a look at your pair, that we'll discuss it through. So welcome traders once again to another trading digest. Okay. So if you are here, you can just let me know where you are joining from, and then also maybe your name and where you're joining from. Okay, I'll crack on with it, so I'll go straight into it. Before I do this, I just want to go through how I trade the markets, what I use to trade the markets. So I just always want to take it simple, make it simple. I prefer it to be simple than complicating things. So the tools that I use for trading is price chart itself, this green and purple candles, and also I use the 20 moving average, this blue line in addition to the 200 moving average, which is this red faint line that I have here. So I always want to have my chart as clean as possible, because the price action is what we need to make the decisions that we do need to make when we are trading. So no need to make it more complicated than it is. So it's better to keep it as simple as you can when you are trading. So I'll just illustrate how I look at it with this quick illustration here. So the thing that I do is price always moves from one, let me change this. So price moves from one level to another level, or one area to another area. So it moves from one level to another area, and then creating a kind of bell-shaped structure. So at each point in time, there's a way you can approach the markets depending on where price is. So this pink line, I use it to represent price itself. So price moves from one zone or one area to another zone, and then come back, creating more or less a bell-shaped structure. So in trading, you have to identify the states where price is at. So let me pick another color, probably blue. So let's say this is my 20 moving average. As price is making its way up, it also kind of follows price, and then also follows price. So the strategy I use is once price is above this 20 moving average, my target or my bias is on the upside. If price is below this 20 moving average, my bias or where I look to trade, the direction I look to trade is downside. Once it's below, I look to sell. Once it's above, I look to buy. Okay, so with that said, I always ask myself three questions whenever I'm trading. I ask myself, where is price coming from? That's the question number one. Where is price now? Currently, as you are seated looking at the charts, you ask yourself, where is price now? And the third question is, where is price likely to go? So let's say, for instance, price has traded up to this higher state or this Y state, and it's currently making its way below the 20 moving average. Let me change this a bit. Price is currently making its way below the 20 moving average, as we can see it here. So with that said, once it's below the 20 moving average, I've already asked myself, where is price coming from? Price is coming from the Y state where it's went high above the 20 and it's now moved below the 20, heading back down to a narrow state. So from this point on, I asked the three questions: where is price coming from? Where is price now? And where is price likely to go? So with this, where is price likely to go? I add what is referred to as the institutional reference point, where I use it to mark or to I use the institutional reference point as my destination or where I take the trade from. So those are the areas that I look to trade to or look to trade from. So once I take a position, let's say around this area, my next target is identifying some institutional reference point area, which is normally called the demand and supply areas, or where an order block is, and then target there as my area to take my profits. Okay, so this is the strategy that I use. So I take the trade from one level and then identify another level to be another institutional reference points where I can take my trade from where I entered to that area of interest or that point of interest. So all that I do on the chart is to identify those points of interest, which I refer to as the institutional reference points, where I take the trade to. So doing it this way, you have a higher probability of winning the trade or having your bias be on your side. So without much ado, let's go straight into the charts and then we take it from there. So this was a quick analogy. Let me clear this first, then we go to the charts. So if you're here and you have any pair that you want me to have a look at it, you can always post it on the charts and then I'll have a look at it together as we are here. Okay, so last week we had a chance to look at gold. So Um, we're going to be looking at this as a top-down analysis. That's starting from the daily charts to the trading time frame. So now I use the 15 minutes as my trading time frame. But if I'm scalping, I go down to 2 minutes or 5 minutes. So what we're going to do is to identify some of these institutional reference points on the daily time frame, and then we will refine it until we get to our trading time frame, which is the 15 minutes. So from that point on, we'll either target to take a trade from there, or from where prices to take a trade from where prices to that area of interest. So let's carry on. So we have the daily chart on now. So what we have here, we had a break. Put this trend line here. Currently, this trend line area price has been trading to this area and it's been respecting this area. So the last break of structure we had here was this one, where we had price breaking below here, so this was a change in character, if I should put it, change in character, because we're up going and then price turned round, breaking below this previous low here, this old low here. So that makes it a change of character. So with that said, once we spot this, the next thing we can look out for is where price originated from to break this low, or to cause this change of character, where it originated from. So as we can see, this happens to be the area. So what we can do is to take the high and the low of the last candle, or the last candle where price originated from. So this will be the target area. This is the target area where price is likely to trade into before turning around. So as we can see, from last week trading, price traded to this area, and also there's this area, or this point, another institutional reference point, if I should put it that way. So we pick the low of this, and as I explained last week about imbalance or fair value gap, as some may call it. So let's aim this. So the imbalance area is this here. So if we're taking these three candles, 1, 2, 3, so we can see that there was a gap left as price traded down here. So that's what I've marked, and then we can see how price traded into the imbalance area and tap into the tip of the other block, or the supply zone. So this area here is a supply zone. This is a supply zone. So we have an imbalance and a supply zone attached together, so that makes it much more a stronger area. So price traded to that area. So all we could do, or could have done, was to, if you were watching it, to use this area as your target area for a sell. And also with this trend line here, we can see that how price has been respecting this trend line. So your entry down here, your target is to the next area where we identify on the chart as an institutional reference point. So with this move here, we have this to be the last candle. So this as I'm doing is on the daily chart. So if we take the high of this candle and the low, so this could be a target. Yeah, so you could target from here to here, and also before this happened, if you can see there's an imbalance area here as well that you can identify. The high of this candle to the low of this candle, stretch it to the left, to the right, sorry. So that is the imbalance area here. So this, as I said, is on the daily chart. So from this point to this point could give you some nice pips. So if I measure here, we'll see what we could catch in from here. So from there to there, given about 125 pips. From that is quite a nice move. So okay, so let's move on. We're doing a top-down analysis. So this is what we have identified on the daily time frame. So we will now move on to the 4-hour time frame to refine what we are looking at. To refine what we are identified on the daily. So on the 4-hour time frame, we will further push this to this area. Okay. So currently price is reacting off the daily imbalance area, the top of it. So this is what we have currently, as we have on this chart. And then we also have this area below here that has not been tapped into yet. So this is a move. Let me pick the so this is an area where we also look at for. So this is another area, a demand area, where price broke above this area and has not tapped into it yet. So this area is a pending area that possibly this week, coming this week, we could have price trading low to these areas, possibly this week. So as I always say, we trade what we see on the charts. And we are all speculators in the markets. So what we see is what we trade. We're not trying to trade our feelings. We're not trying to trade our beliefs. That's why it is important to trade your plan. You plan your trade and trade your plan. So in effect, as you keep on trading your trading plan, you get replaced by your trading plan. You'll be replaced by what you have stated in your trading plan. So it's very, very important to stick to what you have written down in your trading plan. Just like any business, before you start a business, the first thing you put down is to have a plan. The same thing here, if you are trading, you need to have a plan to go by. You can't just be trading. So for this demand area to be valid, we also have an imbalance area attached to this or near to this area of demand. So that is one here. There's another one here. So we have this imbalance here, and then so this area hasn't been tapped into yet. So hoping this week we could have this giving us some cool pips as we can see, price is kind of giving us lower lows as it's making its way down, at the same time respecting this area of the trend line that I've put in here. So let's be on watch out to this as the market opens. What could otherwise happen is price could break above this area, come back for a retest, and then shoot up again to clear the liquidity here, creating a new high. So as I said, we trade what we see. Okay, and also at the same time, as we target this area, this is the 4-hour time frame, we have these areas of liquidity that hasn't been cleared yet. So we have this area of liquidity here, this area, that area, this area as well. So those are the things that draw price to those. When there's liquidity there, price is always drawn to clear the areas before, if it wants to turn around and go to the other side. But currently, this is what we have on gold. So we move down to 1 hour to further refine what we are seeing on the charts, the areas that we've marked. So over here, we can see, so we're focusing on what the recent moves. So over here we have this. So this is on the daily imbalance area. Then we have this area to be our demand area currently. So whenever you have a demand area confluencing with an area of an old area of imbalance, it makes it even more stronger area to be referring to. So once we have this area broken into, we'll likely have a retest before it pushes down. So this is the area. The reason why I've marked here is an area where price last pushed up to break this structure here. Let's put this. So this is a high. So we'll say this is another change of character here. So this is another change of character because we had a price moving down, making lower lows, and this here broke this area, causing a change of character. But as we can see, we haven't had this area price could not break above this area, so it just made equal highs. Price made equal high and then pushed down. So we have another break of structure here. Break of structure there. BOS. We have another break of structure here. So the guy who started this move was here. So we expecting further push down. So let's look at so we're looking to trade down from the way we're seeing things here. As I was explaining earlier on, we have price have this kind of moves where it trades from one area to another area. So with using the 20 moving average and then 200 moving average. We can see how price came to this narrow state, moved away from the 200, creating a Y state. So from the Y state, it has come back to a narrow state. So from this narrow state, that is where we most of the time get the best trades from. So price has come back to the narrow state on the 1 hour. So currently price is below the 20 moving average. It's been trading below the 20 moving average right from this point on. So breaking structures here. So currently we are below the 20 moving average, which means our bias is on the downside. So we look to trade down, as I've indicated here, as I've indicated on the chart here. So if we go further down to the 15 minutes, if we go further down to the 15 minutes, let's see how we can refine this area. So we're focusing on this area where we've marked here. So this is the 15 minutes time frame, and then we have this area of demand also being the same as what we marked on the 1 hour. So we don't need to make any refinements there. So from this point on, we can identify price trading below the 20 moving average. If perhaps you couldn't get a trade from this high, or even from this point area here, there's a high chance of you getting. So from these areas of interest that we looking to identify on the charts, there are specific things that we look out for. In this area. So once I spot such events there, I go into the trade. For instance, a good example is what I have here. I can see that price traded below the 20 moving average. And then it gave this nice event here. Oops, this is too big. It gave this event here where it gives a topping tail bar, and then price closing below here. This is an entry for the downside. This is an entry right there. So all you're looking out for is situations where price is trading below the 20 moving average, and then you look for a specific event to happen, and then you get into the trade. So over here we can see another event here right from the 200 moving average where price surged below the 200 here. So another entry that would have given a nice move to the area of interest. That's the 4 hour fair value gap we marked earlier on, or the 4 hour imbalance area we marked. So we took this trade from here to the area of interest. So once you get to this area of interest, you should either be looking out to take your profit, or you set your take profit here. So once it touches halfway of the imbalance, you are out. Or if you are monitoring it, as you see these wicks being left here, you get out of the trade. So we take our trade from one area to another area of institutional reference point. So let's crack on. So that's gold. That's what we have on gold, and for this week the target is these areas that are. So once market opens, if we don't have this area broken, this daily trend line area that I marked, if we don't have this area broken, where we could have this scenario playing, coming back for a retest before clearing the previous high. So, but as we have liquidity areas down here, there's a high probability of price trading to these lows before making its way back. And as we can see, that we asking yourself the three questions: where is price coming from, where is price now, and where is price likely to go? So we can see that price has been on an uptrend. Now it got to this wide states. So we can see that price has been coming from the wide states back to the narrow states, where the three items, the price, the 20 moving average, and the 200 moving average, relatively come together or stay close together. So once we have that scenario, then we call it the narrow state. So from this point on, we can see how price is trading back to the narrow state. Back to the narrow state. So all that we are doing is identifying these areas of institutional reference points and then taking our trades there in those areas, with identifying specific events happening in those areas and then taking our trades from there. So we are not just marking and then doing it unstructured. Everything we're doing here is structured, it's mechanical, where we take the trades from one area of interest to another area of interest. Okay, so that is my take on gold for now. So we see how it plays up on the once things begin to play out. So what we could do in trading this is, you can either set your buy limits in these areas, where you put your buy limit here and then your stop loss goes below the, let me put this here. Okay. Okay. So we have, so for instance, if this is an area you've targeted to be a place you want to take your trade, so either you put your buy limits there, target it to the next area that's of interest that you target. Your stop loss goes below the demand area there. So this is how you look to trade it. So for instance, targeting this area as well, this will be your setup from here, probably to here. So we target the next area of liquidity, which is this point, from this point on. So this is the idea, this is the analysis that we're looking forward to coming this week. So either use buy limits or you set an alert there. So once price get there, you then watch out for those specific events, then you take your trade if you want to play it conservatively. You don't want to be that trader who is not that aggressive. If you're not aggressive, you can just set an alert there. So once price get there, it calls you to look into the chart, and then you time it and then have a sniper entry. So that is my take on it. But before then, price will also definitely trade to this area. So we could also be looking for selling opportunities to this area as we have targeted here. So we have a liquidity here that we expect price to clear this, fill these imbalances that is being identified here. So we have imbalance right from here to here, imbalance here. So this side has been partially been filled, and this area hasn't been tapped in yet. So we're waiting to see this demand area to be tapped into, or waiting to see price trade into this area. So that's on gold. Let's get on to, let's say, Bitcoin. If you are here and then you want me to analyze any charts, you can go ahead and put it in the charts. I'll have a look at it and then together. If you have any question as well, you can put it in the charts. Okay. Alright, so we have Bitcoin here. This is the daily charts. So we can see how price was pushing down from this point on, and then we had a break of structure here, change of character here, where it broke above this point, and then after that we've been having break of structure as price is making its way up and up and up. So another break of structure here on the daily. So we currently have this low taken out, so we'll term that as change of character. So with that said, this is the last area on the charts that was before the move that broke this low. So this now becomes our supply area. On the daily charts. Let me take this out. So the idea is to refine this point of interest, or these areas that we've marked, until we get to our trading time frame. So currently we have price breaking below the 20 moving average, and once we have that, it's also giving us it caused a change of character. That's had this low created here broken. So now this is where this move down originated from. So we could expect, let's see if we have any imbalance here. So the low of this, let me move this away a bit. So the low of this candle is here, and the high of the third candle is here. So what we are trying to identify is the gap in between, the inefficiency that was created. So we can see that there is an imbalance area close to the supply area we've identified, which makes this supply area valid. So price will always look to trade back to make this area efficient, to trade back into this previous area where there was no trading. this gap here to fill it up and also possibly tap into the supply zone before pushing down. So now we ask ourselves the three questions. Where is price coming from? Coming from the Y state. Where is price now? Price is below the 20 moving average. So with that said, our bias is on the downside, and we always take trades near the 20 moving average. When price is away from the 20, we refrain from taking trades from there. So when price is near or at the 20, that's where we take trades from. Okay, so this is on the daily time frame. We go down to the 4-hour time frame to further refine the area we identified. So this is the daily change of character area we identified. Okay, so now on the daily we identify this area, or the origin of this move to be from here. So over here on 4-hour we can refine it to this candle here. We can refine it to this candle here, or perhaps probably this one, because this is the last candle before the down move. Yeah, so, and then the imbalance area, we can also refine it. We have this one and there. Yeah, so that is what we have on the 4-hour time frame. That is what we have. We had a change of character here, so our expectation is to have a retracement to this, either to the fair value gap areas before they push down again. So on the 4-hour we can also identify that price and the 20 moving average and the 200 are almost together. If we go back on the 4-hour charts, so on the daily, so over here on the daily we can also identify these areas of liquidity here, so this is, or these are potential areas that we can expect price to trade back into. We can expect price to trade back into there. So we expect price to trade back into here, as there are also some imbalances attached to this area here. There's a small imbalance here. So this hasn't been tapped into yet. So it's a pending one. So it's a potential area of interest to take a possible buy from there. And let's take this out first. So there is another area here. So I'll take it from there. So all these areas where their liquidity resting haven't been cleared yet. So these are all potential pending areas that we could expect price to trade back into here before continuing its move to the upside. As I said, we trade what we see. So we go back on the 4-hour. We trade what we see. So on the 4-hour here, we've also let's try to refine this. Yep. So this the daily area looks okay. So we go down to, okay, let's see this one here. So for this one, we can refine it right to this area where the move began to break this structure here, came back for a retest, pushed up and broke another structure. Yeah, so let's go down to 1 hour to further refine our area of interest. We want to refine it to until we get to our trading time frame, where we will kind of set a trap in those area of interest to the upside, depending on what we see from that area of interest. Depending on what we see from that area of interest. So right here we have another point of interest that hasn't been fully utilized yet. So before this push up, price kind of okay, so there's an imbalance around this area where price tapped into and kind of holding there at the moment. Let's mark the area of imbalance. Area of imbalance. Okay, so we have this area of imbalance, and that's where price kind of tapped into and then traded down, went back up. So we're kind of consolidating around this area currently. Consolidating around this area, as we can see. So these up here are all pending areas where we can expect price to trade back into those areas and then have a push. So but the thing we have here is we have so many areas of liquidity, so many areas of liquidity here. Area of liquidity, area of liquidity, area of liquidity, area of liquidity, and there's this demand area here. So from what I can see here, there's a high chance or high probability of price trading back down here to clear all these liquidity areas as it draws it to those levels. Okay. So from what I'm seeing here, we have these areas of liquidity that has been created. These areas of liquidity that has been cleared yet. So these are areas that price will be attracted. It serves like a magnet that pulls price to clear it. At the same time, as it clears this area of liquidity, it also looks to fill any imbalances along the way. So we have some imbalance here that's not fully filled. Let me enlarge this chart a little bit. Let me enlarge this chart a little bit. So as we can see, this area of imbalance attached to this area of demand is not fully filled. So, and with all these liquidity areas here, we have a high probability of price coming down to, as it's already made a new high. So once it made this new high, we look to clear this area to this low, possibly. So this is a pending area that um, this coming week we could expect price to do something like this and then tap into this before pushing to the upside. So all we could do is to target this area where there is imbalance there as well, where there is imbalance. Yeah, so as I said, we are all speculators of the markets. We trade what we see. So from the charts as I'm looking now, this is how I see it. If you have any different view, you can put it in the charts so that we can all have a look at it, digest it, and see how best we can make money out of the markets. Make money out of the markets. Right. So this almost an hour gone. Almost an hour gone. So I don't plan to take this too long. I'll probably have a look at another page. So this is only 1 hour. Let's go further down to 15 minutes and then let's see how best we can identify this. So currently on the 15 minutes, we had price is holding in this area of the higher time frame imbalance area, holding. So let's see if we can spot some movement. We have this break here. We have that break there. Break of structure. We have that break of structure there. So price is currently trading higher. And then we also have another break of structure. Break of structure right here. Okay, so we're kind of pushing down, made a break of structure, then pushed up, had this change of character, looking to be going up. But if you look into it critically, there was a break of structure right here earlier on. There was a break of structure right here. And the origin of this break of structure, is here. We'll put it here. So this is the last candle here. We stretch it to the right. Yeah, that's the right. So that's the last candle there. So that's supply zone. Now what we have to do is also to identify an area of imbalance. So we have from this point on to this point. Okay. So over here we have area of imbalance in the supply or the other block, where price after this break of structure, because we had a price making lower lows, broke this area of structure. So after this break of structure, with this big push down, this is the first time we're having price trading to this area. So kind of tapped into the imbalance area and then making its way to the downside. So all we do is identify these areas before all this happens. So what you could do is to either set a sell limit here. You set a sell limit right here before all this happens. Your stop loss goes above the demand area, and then you targeting the previous low. So the next area of interest is this area here, this demand area we've put down here. So your entry here targeting this low, that looks to be a nice risk reward ratio entry. So that is how we do it, that is how we take it, that is how we do it, that's how we take it. So with that said, we almost an hour, almost done an hour. Yeah, so that is how I do the top-down analysis. Start from the daily, and then you begin to refine it further down and down and down. So this area here is it's higher time frame fair value gap or imbalance area, where price is been held here for some time. After this break of structure, tapped into the fair value gap or the imbalance area, push up back again, and then tapped into this area where it originated from, this whole move originated from, and currently this is where we are at. So yeah, so that's where we stand in terms of Bitcoin. That's where we stand currently. So this would have been a nice entry. We've seen some reaction from here as price tapped into the 200 moving average. We've seen some reaction here, but overall we identify some pending areas on the higher time frame where we expecting Bitcoin to clear these areas of liquidity, and then also fill these areas of imbalance that's left there. So currently this is what we have on Bitcoin. Okay, let's see if we can it's not okay. It's already 8 o'clock. I always want to keep this to at least an hour. Don't want to take too much time, but the whole thing is the same on any pair that you pick. Is the same thing that we go through. Is the same thing process that we go through. We follow the same process. To go through this. Okay. So once again, thank you so much for being with me today, and I believe you had a valuable time with me. You learned so much as I went through this. If you have any question, you can pop it in the chats. So if I don't even answer it now, probably in the further ones that I do, I will look to answer it for you. Okay, so I'll say that just a quick rundown on this. So this is euro dollar USD, euro USD. So euro USD, we have the daily time frame telling us there is a break of structure here. There is a break of structure right here, or change of character. it's a change of character, because we had a push to the upside where price got into this Y state, so we anticipate it to turn around. It's coming from the Y state back to the narrow state. So from this narrow state here, from this narrow state here, we had price pushing to the wide states, this wide states, and then making its way back to the narrow states, where price and the 20 moving average and the 200 will probably come close together or relatively together. As I said, that is how price moves. It moves from one area to another, creating a kind of bell-shaped structure. So at each point in time where you identify which states it is in, you can always spot it and then find one of the best trades. And where to find one of the best trades is when price is in the narrow states. It's a good example is here. This is on the daily time frame anyway. So just imagine if you had an opportunity. Let me clear this. We had an opportunity right from here, this narrow state, where we find an event here where price took out this last purple candle. That is an event to take us to the upside. This would have been a very nice entry point to the upside. So if we look to the left, we can also identify that where price got to, if we can also identify that where price got to, it got there for a purpose. Look at all these areas of liquidity the price had left there in the past. So as price began this move up, its aim was to clear this liquidity, and after clearing all this liquidity, making a new high, it began another move to the downside. So these are the reference points I use in taking my trades. These are the reference points I use in taking my trades. So, all right. Thank you so much for being with me or spending time to watch this video. I believe you found so much value in it. If you haven't subscribed to this channel already, I urge you to click the subscription button and the notification button so that anytime I post a new video, you'll be notified to enjoy it or to learn from it. And I believe this will be of much value to you as you join me in this journey together, making money in the markets. So hope to see you again